Hi there to the audience. We are live now. I just said to Chad that I forgot to shave myself, but Chad did the same since years even. So for me, it's not a shame. So
I've had a beard since 2003. I don't actually shave.
okay. Hello to any one of you. Thanks for visiting us. And yeah, it's me, Thorsten, founder of Dividend Stocks Cash or Aktienfinder.net, depending on where you are looking and which website you are watching. And this is Chad from the United States, still living in Seattle, I guess.
Yep.
Because of your widescreen, I can't see behind.
Yeah, my wife is cooking in the background. So.
Yeah, okay. And your cat is at home too.
They're upstairs in the underneath the fans. It's actually kind of warm today.
Let's see if it visits us once again. So what we are not talking about beards. We are not talking about Seattle or about the weather this time. We are talking about the stock market. We are talking about Japanese stocks, and it's a fashion subject because Warren Buffett disclosed that he bought more than 5% of the market capitalization or all outstanding stocks of 5 trading companies, Japanese trading companies, and we will present them to you and explain you, or at least try to explain you a little bit what it is, because these are very strange animals, right, Chad?
But yeah, this was a surprise. You actually brought this up to me yesterday, and I'd seen the news, but I hadn't dug into it until now. Japanese trading companies are different than what we're used to in the regular stock markets. The thing to realize as I was doing the research, I understood what they were talking about. Japan is very resource poor. It's a very small country. It's island based. So for most of what they do, they need to import. And so over the last 50 years, since the end of World War II, they've developed a trading company format for businesses that allows these businesses to do whatever they need to. Now, in the United States and Europe, we've got different sectors. We've got different industries. You've got information technology, industrials, mining, things like that. In Japan, you can have one company that is completely horizontally integrated across different sectors and vertically integrated, where one company can do the raw mining and then the processing of that raw material into component parts, and then you put those component parts together into a final product, and then you sell that product to the customers. Okay. In Japan, for these trading companies, it's a complete integration, which is actually frowned upon in the US and Europe because we want different companies to do different things. But in Japan, at least with these trading companies, they can do everything.
Yeah, that's right. You already made a deep dive. I just wanted to make the introduction because we wanted to speak about something else first. We wanted to tell you that if you don't know, Tesla didn't make it into the S&P 500, but 3 other stocks did.
Right.
So you already explained what trading companies are. We will come back to that. And Chad, you are the born teacher. So I'm just showing you that's the English website. And we just wanted to show you the 3 stocks which made it into the S&P 500. Just very shortly, that you are well informed and you can impress your audience on Facebook or Instagram with your outstanding knowledge. So these are the 3 stocks. I enlarge the few, and of course it's American stocks. We are talking about the S&P 500. It's Catalent, Etsy, and Teradyne. And here you see where they are: healthcare, software. Etsy, little bit like eBay. By the way, my wife, she's just occupied on parallel in another room of setting up their Etsy shop because she wants to sell her handmade stuff there. I mean, maybe present later time, and Teradyne. And if you are interested in any of these stocks, then just drop us a comment and we can talk about these stocks in another session. And as I already said Tesla didn't make it into the S&P 500. Just have a look at the market capitalization here. They are very close to each other, between 30 and 50 billion market capitalization. Tesla right now, I don't know, it daily changed something about 400 million and still didn't make it into the S&P 500. But
432 billion.
Yeah, that changed every day. 10% up, 10% down. If the daily stock price of Tesla doesn't change about at least 5% a day, then something is wrong. Then
up or down, it actually took a dip.
Or it's Sunday or Saturday.
Yeah.
Okay, but that's just about the new entries in the S&P 500. And then, Chad, back to trading companies.
Well, really quick, a lot of people have questions on why Tesla didn't make it. And I've been watching and I've been reading a little bit about that, and I could probably guess that they didn't want to deal with the valuation of it, because the valuation is fluctuating so much. It would cause havoc, because the S&P 500 is a weighted index, and it would cause all kinds of crazy chaos. And another thing that I wanted to show on dividendstocks.cash for Tesla is their estimates into the future. Now, remember, on stocks.cash, the black line is the current price. The orange or low green line down here is fair value based on cash flow. This is the adjusted price to earnings ratio, and this is the raw price to earnings ratio. And the estimates show really interesting things coming out of Tesla over the next 1, 2, 3 years.
But get rid
this
of
is amazing.
But get rid of these. They are not representative.
It's really hard to gauge, because this is an insane valuation increase. 11,000, almost 12,000. Yeah. Let's get rid of those.
Tesla just started to make gains, to earn something, and because of that, the fair value based on the history, which is so short, isn't really representative.
Right.
Cash flow is already better. Yeah.
Their cash flow just started coming into the positive in 2017, at the end of 2017, as you can see on the graph. Mm-hmm. The adjusted just started coming out in the middle of 2018, and the earnings per share just recently started coming out.
Yeah, they made
actually during the COVID.
They made earnings, or they're positive, or made earnings for the last 4 quarters. That was one of the criteria to meet for them to be a candidate for the entry of the S&P 500, and they made it.
They made the criteria, yes. I think they'll get in there eventually, but for right now, it's mostly just a snub.
Exactly. I don't really care. I sell stock options on them, on my own shares, and so I just they are until 18th of September. It's the last trading day. I'm not selling them back. They will just how to say, they will mature, and then they are gone, and then I can cash anything.
I bought 1 share of Tesla at the end of 2018. It's now 5, and I have no plans to sell that.
Good. Back to Japan from the United States. Back to Japan. And I just wanted to show something. Chad already told you about these horizontally, vertically integrated companies. And there are 5 big trading companies. There are 7 trading companies. Warren Buffett invested in 5 of them. He invested in the 5 largest trading companies. And I just want to give you another impression about their feature richness, where they are and busy. And here you can see what they are doing. Here you see something about mining. and they are also here producing infrastructure stuff, metals, tubes you can see here, machinery. Then we scroll down, that's transportation, construction. So they transport a lot of stuff, they import, export. They are on an island, as you know. Then we scroll down, infrastructure. They also produce energy. Then you see that they are also in media and digital services, in telecommunication. So they are in real estate. They own supermarkets, probably. So they are doing really a lot of stuff, chemicals, electronics. So, and they are overall responsible for, I was just reading that, about 50% or more, these trading companies, of the gross product in Japan, the national gross product. So they are really mighty. And then now you have would be very smart and profitable indeed. Okay, and now we try to guess, Chad, why Warren Buffett invested in these stocks. And I already have one guess. Maybe let's add Warren Buffett on the screener, not himself, but his
Berkshire Hathaway?
stock. Exactly. So the cheap one. So that doesn't really matter, but so now we have Berkshire here too. And you probably know that Warren Buffett has a problem, and the problem is it's a problem we would like to have ourselves. His problem is he has too much cash. Here you see cash of Berkshire in the course of years, and you see that he never had as much cash as he has now. He has 146.6 billion in cash, which means he needs to invest it, because we are living in times where you don't get interest and paid anymore.
Right.
Except if you have debts, then you still have to pay interest, right, Chad?
Yep.
But if you have money, you don't get any. So that's a problem.
Yeah,
And,
savings accounts are paying 0.1% around now, thanks to the Federal Reserve. So just holding something, an amount of money like that in cash is, I mean, even 0.1% of that much with that much cash is earning something. But the owners of Berkshire Hathaway stock have been looking at Warren Buffett for the last 50 years, saying, let's maximize the return. So one of the things that I read from an analyst at Fidelity International, Maria, I'm going to butcher this, Nichikova? Anyway, she identified three particular things that he is focused on with investments like this. He thinks that these companies are allocating capital wisely. So that's the horizontal and the vertical integration. And I can go into that a little bit more, talking about what the term is in Japanese and how it works, because these are special. This is a special corporate format. But they're also really good at generating cash and cash flow. And if you've been watching Warren Buffett and Berkshire Hathaway over the last couple decades, you know they're very focused on cash flow. He famously made a $200 billion investment into Coca-Cola just because their dividend was decent. And he likes Coke. But he's looking for that kind of cash flow and those kinds of returns. And these companies are also boosting shareholder returns through dividends and buybacks, which goes along with what I just said. So the cash flow comes back to shareholders, and with Berkshire Hathaway, that's their main focus. Mm-hmm. So the term that they're using is, and I'm going to butcher this again, Sogo Shosha.
Sogo Shosha, yeah.
Sogo Shosha. This is from Wikipedia. And they are Japanese companies that trade in a wide range of products and materials. In addition to acting as intermediaries, Sogashosha also engage in logistics, plant development, and other services, as well as international resource exploration. Now, we've been hearing a lot about China making investments for the new Silk Road. These are investments in other countries to be able to develop a trading route for goods and services from China all the way to Europe. These Japanese companies are doing the same thing. They are not only horizontally and vertically integrated, but they're also international because they are making investments and partnerships in companies all over the world to get the materials that Japan needs, process them on site, and then shipping them to Japan, all integrated within their internal corporate economies.
Yes,
That's a big change.
Yes, there's also exactly. There's something interesting I was reading. I was reading that they don't have big brands mostly, these trading companies. So for many people, they are really unknown. So for consumers like you and me, they are mostly unknown, these trading companies, because
They're unknown
they
by
lack
their
brands.
corporate names, yes.
Yeah, but many people, or they are mostly known in developing countries because of infrastructure projects they finance. So that's what you said. I just wanted to add this to the story. Let's come back to Berkshire only once more, where it is here. And I just wanted to show you because this really shows the problem of Warren Buffett, which he has. If you look back in 2000 or even 1999, then you see that he had less than 4 billion in cash, 4 billion US dollar. And then we had the dot-com bubble burst, then the financial crisis, it went down. And now he has so much in cash that he really needs to find ways to invest. Okay, and now, Chet, you want to add something? Otherwise, we can look at these companies from a fundamental point of view.
So when he invests cash, and he's invested $6 billion into these 5 companies, what he's looking for is return. And what we like to talk about a lot on Dividend Growth International is dividend return. So let's take a look at the dividends of these 5 companies and what they've been doing. I'm going to go to Seeking Alpha, and I'm going to just show the dividend growth. Now, this is just dividend growth. We can look into the histories if we want, but let's just look at dividend growth and watch the parallels, okay? This is Itochu, and they started in 2008. They increased their dividends significantly until 2011, had a slight dip, but now they're up to, all-time highs when it comes to annual dividends. Let's go to the next one, Marubeni. Wait, that's the same graph. They started in 2008.
Okay.
This is something that I noticed, and I wanted to show it off. So they, again, started in 2008. They had an increase and a decrease. And now let's look at Mitsubishi. Same thing. 2008, they started, increase, decrease, and now they're all on-time highs. Here's the 4th one, pretty much the same. They increased a little bit better than the others, and here's the last one, Sumitomo. Okay, this was really interesting when I looked at it because all 5 of these companies are growing their dividends double digits on average over the last 10 years. And we could probably see that on Dividend Stocks Cash too, if you want to show that off.
Yeah,
but
for sure.
The parallels between these 5 are just incredible. And what I realized is with the horizontal and the vertical integration of these companies, what we're looking at are basically exchange traded funds of all of the industries that these companies are involved in. So it's like the entire economy. And what we're seeing here is, let's get back to that, is the ETF growth of these economies. I just wanted to show that because it was a fascinating parallel between the 5.
Yeah, that's true. Let's show me the same on. We just clicked the same. Okay,
Again, go ahead.
here we are. One thing to add is that you presented on Seeking Alpha the ADRs, so not the original securities.
True.
This matters for 2 points of view, because first, these companies pay dividends much longer than since 2008. My guess is that the ADRs exist maybe since 2008, and because of this, you don't have history in Seeking Alpha for the years before. And another thing to note is that the growth rates are calculated in US dollar, not in Japanese yen. So if you go to these websites, the dividends are paid in Japanese yen and declared and paid in Japanese yen.
True.
You can also see it here, 46, 50, 55, 70 Japanese yen. So it's always very clear numbers like 55 or 70. While if you look at dollars, then you always have some strange numbers, I think, some cent numbers.
Because of the currency fluctuations and the float.
Yeah, currency fluctuation, yes, exactly, is another problem regarding the growth rates, because they are calculated in US dollar. But in this case, we already checked it yesterday, not so much, because the fluctuation between Japanese yen and US dollar exists, but it's not completely throwing the numbers away. Okay, so Warren Buffett invested in these stocks, and what you already talked about dividends, and I think dividends are a very important subject. Let's get rid of Berkshire here. So Berkshire is gone. And the first thing to note maybe is the market capitalization first. So to get an idea about how big these companies are, and they are between 40 and 10 billion market capitalization. Maybe not so much. After anything you just heard, that these are so big companies, you might have expected that market capitalization is higher, but it's just between 10 and 40 billion US dollar. They pay twice a year. Dividends are paid twice a year. So it's somewhere between Germany and the United States. Germany only once a year, and the United States quarterly, 4 times a year, and Japan somewhere in between. I was just reading that dividends are fully qualified in Germany. So the tax in Japan, the dividend tax is 15%, and it's fully qualified in Germany. So we don't have double taxation, at least not in Germany. And then what's really interesting, I think, is the dividend yield. And here these companies really shine, Chad, with dividend yield between 5.2 and 3.1%. And I think this might be the main reason for Warren to invest in these stocks.
Not just that, look at the dividend stability.
Yeah. Dividend stability is here. So they are mostly reliable dividend payers, reliable high dividend payers. So that's an interesting combination. Although if you look just at the classic numbers, years of dividend increase, so 3 times 0 and 2 times 4. So these are classic numbers. I mean, in a way, dividend aristocrats are made. 25 years of consecutive dividend years of dividend increase. Hooray, hooray. And here you see that they are very far from that. 3 of them even haven't increased their dividends at least for 1 year. So these numbers are disappointing, if you want. But the numbers about dividend stability say something completely else. They say these are reliable dividend payers. And we will have to look in detail, as you already did, Chad, to get an idea about the dividend policy in Japan.
Right.
Because I think that's interesting. And another thing which might be of interest is earning stability. which is also disappointing. Big exception is Itosho, the only company with an award, by the way. But cash flow stability on the other way is much higher than the earning stability. You see that here?
Yep.
And that's something you already said. Stable
It's
cash
something
flow.
that Warren Buffett is definitely looking for, is cash flow and dividend stability. And all five of these companies are doing really well.
Yes, exactly. At least much better regarding cash flows than regarding the reported earnings. And I think that's the most interesting numbers. And let's have a look at the dividend policy in Japan, at least for these trading companies.
Okay.
We start with the biggest one by market cap, close to the biggest one by market capitalization, but the biggest one by dividend yield. And just for you to remember, dividend yield is always based on the last 4 quarters. Or the last 12 months, even on the last 12 months. Let's have a look here. First, we see that we had several dividend cuts, right? So I can see one dividend cut, second, third, fifth. And here, I'm not really sure if there will be a dividend cut or not, but we see anyway that we have, it's like a wave. It's like a pending tsunami, but we always have some dividend cuts. And then we add earnings to this. And if you just look at the earnings, then you might think that there's still enough free cash flow too. Okay, from the free cash flow perspective, you will see that sometimes dividends are covered and sometimes completely uncovered because there's negative cash flow. But I think that management oriented themselves regarding the earnings, because you can always see if the earnings went down, then there's a dividend cut. Earnings went down, there is a dividend cut. Earnings went down, they were stable, but mostly if earnings went down, there were dividend cuts, right, Chad? Here too, earnings down, dividend cut.
It's interesting, if you bring in the free cash flow and operating cash flow, you can see a more complete picture. So you can see in 2014 that they did something to increase their cash flow significantly. So in 2015, they had a special dividend of 10 Japanese yen per share. And then their cash flow took a slight dip. Their earnings per share went down, and they dropped their dividend as a result. So they're very much reacting to the market, but they're also rewarding their shareholders if they find themselves in an excess of cash flow.
Let's just look at another one, because we could say it's just a coincidence. So which one do we choose? Sumitomo, Mitsui, Marubeni, Itosho, which one?
Sumitomo is the next one for market capitalization, or no, next one for dividend yield is 5.06. And look at the parallels.
Yeah, exactly. Yes, the dividend cut. Slight dividend cut from 49 to 46 Japanese yen. I think we really will struggle to find an American company making a dividend cut for just how many percent? 5 to 6%, huh? Between 5 and 6% dividend cut.
And what that tells me is they're very much reacting to the actual market conditions.
Yeah, exactly.
They're giving dividends out based on what they bring in.
Exactly. But still, they always paid dividends, so they never cut them completely. And what is really nice, I repeat myself, is the current yield. So it's really a high dividend. Yeah. And what might also be interesting is if we add the stock price, then to get an idea if Warren bought these stocks with an outstanding dividend yield, or if the dividend yield is rather low right now. So maybe Warren Buffett made some timing, or he was aware that these companies now pay higher dividends than before. I know, honestly, I don't really know, but let's check out
Well, one of
the
the things that he
dividend.
said in his announcement is that he's considering these to be long-term investments. So basically what he's saying is he trusts these companies to do the right thing for shareholders. He trusts these companies to continue to grow and continue to pay their dividends and capital gains returns over the long term. And he said this on his 90th birthday, by the way. Happy birthday, Warren. And he's looking at the far future, way beyond where he will likely be with us. You know, he's looking to Berkshire Hathaway to be a major investment company into the far future.
Yeah. Okay, and here you see the dividend yield. It was much lower, so this, get rid of all this. This is just the dividend yield. And you see now, okay, there was a special dividend coming in here, special dividend, and it got a peak, but we are right now about 5.1%. And we see, so it's this dotted line here is 5%. And you see that from an historical point of view, they pay really a lot of the dividend. Current dividend yield is really high. It's really much higher than it was in the past, and the dividend yield is going up. You see here, that's what we are used to from the stock price for tech stocks.
Their
Not so
average
much.
yield over the last 4 years is 4.25%, according to Seeking Alpha. That's a decent yield.
Yeah. Yes. So the first it was first an artificial increase bump of the dividend yield during the financial crisis. That was probably due to a stock drop in stock price.
Right.
But then I think that was really an organic growth. They also increased their dividends here. So let's check out if this was coincidence. This is Sumitomo. Let's go back to Mitsubishi. And let's check this out. And it's basically the same picture, right?
Yeah, it is.
So the current dividend is much higher than it was before. Here, I think after the announcement of Warren that he invested in these stocks, the next day, the stock price of all these trading companies went up about 9-10% within one day. And due to this, the dividend yield went down. Huh? So you see that he invested. He said that he invested or he passed 5% of the stocks of the outstanding stocks of all 5 trading companies. So he started investing here to there. So he invested in growing dividend yields. Just one more, and then we stop this. A little bit a different picture, but this is Itoshu, but still current dividend yield rather, from an overall point of view, 3.1%, though they have the lowest yield of all 5 stocks. And it's I would say it's just about an average or even a little bit below regarding the last 7 years, 8 years, 9 years. Okay.
But their dividend stability is 0.96 on your site, so they are paying a very steady dividend.
Yeah, and the earning stability is really high. Let's show it here. So you see this picture? It's the best picture of all trading companies we have. And here's the operating cash flow. And this is the free cash flow. Free cash flow barely negative last time in 2008. And the other trading companies we were looking at had the negative cash flow more often. So for me, if I just look at this chart, Itosho really shines. And maybe not only for me, but also for our investors, which might explain why the dividend yield is lower than for the other trading companies. Because it's a little bit still. Okay. Do we have any questions from because we are making here anything without the audience?
Looks like Jürgen has a few comments that I can't read.
He means too expensive right now for Jürgen. Okay, maybe. We can look at valuation, Jürgen, if you want. So, because this would be the next thing to do. What's also interesting is what to expect from these stocks.
Right.
So, which yield, high yield, low yield? We already know that we can expect dividends and decent amount of dividends, but then we already also have capital gains, at least for some stocks, not for each one, unfortunately. But here you see that it's kind of mixed bag. If you look back 1 year, then we have capital losses for three of these stocks, and 2 of these stocks capital gains. And once again, Itochu shines with capital gains of 30%. Then we have Mitsui, 40%, and the other ones more or less stable, Mitsubishi, or they even lost 6%, Marubeni and Sumitomo, even 50%. But if you look even more into the past, then we see at least that all of these stocks had capital gains. Looking back 10 years ago, between around 40%, and once again, Itochu shines 300% capital gains. So I think if we look at these stocks, we can have a look at Itochu. That's the best performing trading company in my point of view. And then we can look at the worst, Sumitomo, Itochu. And here's this valuation tab. Here, there's one comment. Chris means that's also interesting, is a low payout ratio based on free cash flow. Yes, right. Normally, I pay more attention to the free cash flow if I look at the safety of the dividends. You're right, Chris.
But I look a lot on the payout ratios, and I've got those up. Let me show those. Seeking Alpha does that calculation pretty easily. So before we get to evaluations, let's answer Chris's question. So I've got all 5 up, and let's look at cash dividend payout ratio. For Itochu is 15.45. For Marubeni, it's 20.34. For Mitsubishi, 31.
Sorry, is this based on free cash flow, this payout ratio?
Cash dividend payout ratio, TTM.
Cash. Okay, should be cash flow.
All right. The fourth one, Mitsu is actually the highest at 54.17, but still, that's just a mature industry payout ratio. And then Sumitomo, 35.09. So I would call, 4 out of 5 of these are decently low, and the 5th one at 54 is not that bad.
Exactly.
So yeah, they do have a low payout ratio, which gives them room to grow their dividend if it's low enough, or at least maintain it, which they've been doing for the last 10 years.
Yeah, that's a normal interpretation. Get me back here, because I have the same numbers here, and they are in fact really similar to what you were just reading on Seeking Alpha. So you were just mentioning the payout ratios based on free cash flow. I have some percent more or less than on Seeking Alpha, but basically they are the same. It's really different to these payout ratios if you mostly at least, or at least for these, if you compare payout ratio based on free cash flow or based on earnings per share. So there are some huge differences. You see it. Marubeni even posted losses, so we can't calculate a payout ratio. Because of this, I wrote 100%. That's always wrote if they post losses. But what struck me here with these Japanese trading companies is, while it's it's from a fundamental point of view, it's better to use this payout ratio based on free cash flows. The management seems to pay attention more to the earnings per share evolution. That's what I wanted to show. But for us as investors, we just look at both of them. And we have both of them, at least on dividend stocks cash. And now let's get a better idea about the valuation of the stock. And this is Itoshu. It's the it's the prime trading company now, in my point of view. And this is the evolution of the stock price and what to expect from this. If we just have a look at this, we just saw the numbers already on the screener, but I think that's still interesting, the numbers here. If you bought the stock here for 544 Japanese yen back in spring 2000, and you still own them today, then you had capital gains of total yield of more than 500%. So that's already decent. More interesting is the annual yield here, including capital gains and dividends. It's 9.4%. So you bet the general stock market if you invested in Itosho with 9.4%. And this is your yield on cost chat. This is your yield on cost. If you bought the stock here, then they started paying dividends paying dividends here in 2001. And then your yield on cost, personal dividend yield in Germany, is 16%. So that's also nice.
That's a new calculation on dividend stocks.cash.
Yes, awesome. Exactly. We have here in a comment. Do you consider Japan's demography a threat to these players? Good question.
It is a good question. And what I think Kai is referring to is the fact that Japan's population is the oldest population in the world demographically. No, I don't. And the reason why is because they will be able to adjust to whatever market changes happen when the youth in Japan gets up to their ages. One thing that was interesting in our discussion yesterday, Torsten, is you talked about how these companies are hiring people right out of the gate, right out of high school. And these are companies that people in Japan in school want to work for because they pay such high wages. They pay all kinds of benefits. And these are the companies to work for in Japan because of the integration, horizontal, vertical, international. These are companies that are going to be around forever. And so the people coming out of high school and college in Japan want to work for these companies. I don't think the demographics are going to be that much of a threat.
Yeah, they are highly respected, these companies, and exactly, and they pay nice wages, above average. Still, I don't know if the population is more and more aging, then the demand, the purchase power of the population tends to decrease. But that's not a newer problem for Japan. No. That's already a problem for decades. And I think that the companies can adopt to this. On the one hand, on the other hand, I was just opening Seeking Alpha, the workstation of Seeking Alpha, because I wanted to get an idea about the revenue exposure by country. I wanted to know if they are also diversified, a little bit at least, by country.
That's not Seeking Alpha.
FactSet, sorry.
Okay.
Exactly. That's exactly. This is Itoshu, and you see that the revenue exposure is about close to 80% of revenue they really make in Japan, a little bit in the United States, 5.4, also 5% in Singapore, and so on, so 20% abroad, but most of the revenue is done in Japan.
Okay.
So It was a good question, Kai. Population will decrease too. Tricky, yes, exactly. But I think if companies can adopt to this problem in Japan, then it might be these trading companies. And as I repeat myself, it's not a new problem for Japan, and still the stock price went up, revenue went up, and so on.
One other thing to say about this, and I'm doing searches and looking at demographics, and one other thing to realize is the average age in Japan, and the life expectancy of people in Japan is actually really high compared to a lot of other countries. They are honestly expecting about half of the babies born this year will reach 100 years old. So, we're talking long-term planning for companies like this to be able to provide goods and services for their people at all stages of their lives.
Yes, that's true. Okay, let's get an idea about the valuation of the stock, because that's still missing. So did Warren Buffett bought these stocks expensive, or was it a cheap buy? Was it a bargain? And we see here the earnings, the adjusted earnings. They are a little bit less bumpy than the operating cash flow and the dividends and anything. And I just need to get you see here the multiples. If I just look at the multiples, then you need to scratch your eyes. Multiples never reach 10, neither. Here once, but that's not representative because of decreasing earnings. So current multiples are, let me have a better look, between about 7 based on earnings and about 4 based on operating cash flow. So, Chad, that's really low, huh? That's lower than for AT&T, probably.
Okay.
Oh, I think. Okay, and go. Let's go. Yeah, you can do that if you want, and then you can tell me if I'm right. So let's make the valuation of the stock, and we start here. And then you see these numbers. I think because we will see it here. We can't use all valuations, I think. Let's get rid of the operating cash flow, and let's get rid of the green line, which is based on reported earnings, because it's more unreliable. And then we still have these, huh? And what we can do, we can even be more generous. Let's take this one, and then we get the complete picture, at least starting from here, because we hadn't adjusted earnings earlier, and now we have the complete picture here. And then you see what's really typical for any stock, periods of over and undervaluation, and you see generous dividend payments. So the stock based on the dividend yield seems to be a bargain, but based on the adjusted earnings, the stock seems too expensive, especially if we consider the estimates of the current business year, because mostly, I'm sure, because this is the 100% explanation for nearly every problem companies now face, is always the Corona pandemic.
Yeah, the COVID shutdown.
Yeah, exactly. And I think that this is the same, or this is also related to Corona, the drop in earnings here. And due to this, let's get over it. So you see it much better that the stock price, the stock was mostly undervalued here. And this was when Buffett was buying the stock somewhere here between here. So just to give you a visual indication, I think this is the period when Warren Buffett invested in the company, and the stock was mostly undervalued when he bought it, especially regarding the cash stream out from the company. So the dividends.
But
Yes.
again, remember, he's investing for the long term.
Yeah, and if you look at the long term, at least at the medium term, then things don't look so nice, at least because regarding the estimates, the earnings will go up. We can see it if we add them here. So the earnings will go up again, but they might not reach the levels before the corona pandemic very soon. So in 23, with 322 Japanese yen adjusted earnings, this is still below 340 Japanese yen.
So we may have to wait
2020.
until 2025 or 2030 before the current value matches fair value.
Might be, yeah, exactly. So if you are a dividend income investor, maybe you don't care because you say, I'm interested in this blue line. And there, the analysts say that the dividends still increase, although here we have a slight decrease in earnings. Also in reported earnings, both in reported earnings and adjusted earnings. But still, the analysts think that Itoshu management will increase their dividends. And then maybe you don't care about this line if you want, if you add also respect capital gains. If you want to profit from capital gains within the next 2-3 years, then maybe you won't buy the stock, or at least you will wait until this Warren Buffett how
Bump.
can we
The Buffett bump.
the Buffett bump, exactly. After the Buffett bump, when it goes down again, and then you buy the stock because it's fair value 2,057 Japanese yen.
So how do the other stocks compare on that graph?
Okay, we can ask the audience which trading company to value if they want to.
Well, I think most people have probably heard of Mitsubishi. So let's take a look at Mitsubishi.
It's not the car manufacturer, probably. Okay. It's the second largest of them.
Mm-hmm.
So you see a complete different picture, at least from here. Look at the capital gains here within a very short period of time, or 8 years, but that really was outstanding with annual yield of 20% within from 2000 to 2008 within 8 years. Not bad, but then we had this considerable drop from 3,700 Japanese yen to 1,000. Wow. Okay. And the overall yield, do you still remember Itoshu? It was 9.6, I think.
Yeah.
And this yield is 7.4. So slightly below, but I think it's still okay. Huh? And if you look at valuation, I think it's difficult. No, first look at the matrix here. And surprise, the multiples here, at least between 3004 and 3002, the stock was more expensive than Itoshu. And now in recent days, it's still more expensive than Itoshu with price earnings between 8. I think Itoshu was something around 6. And the price to cash flow from Itoshu was something around 4. And here's about between 5 and 8 within the last years. So this stock seems to be more expensive, but it went down, huh? And Itoshu went up. So it looks a little bit overpriced regarding comparing to Itoshu, at least for the past. Okay, now just take a look at the sorry, I made a mistake. Let's have a look here at the valuation of the stock. I don't know if it's easy to value. Oh, yeah. Look at that. That's because the reported earnings are really unreliable. I hope the adjusted earnings are better. Yeah, yes, they are slightly better. You see it here. And the operating cash flow, we have no estimates for the operating cash flow, unfortunately. So I think we also go with adjusted earnings and fair value dividends and get rid of this. Well, it's difficult to evaluate the stock. So, but what we can see here, at least, is that there is they go on parallel. You see it here, Chad? You see the up and down here, the fair value of the stock price really goes up. This
Yeah.
is the orange dotted, not the orange, the brown dotted line. And then you can see what the stock price 800 Japanese yen, and now it's worth 2,000, and now it's even worth 3,000. So I don't believe in that, but the stock market did. You see this? And this calculation is only always based, this fair value calculation always based on the past till the present, and present is this. So I just show you. If I just make this, then you get a very similar picture to what I just showed you, and it really and the stock market really respected this kind of calculation. So it looks really adventurous or hazardous. What we see here, this line, on the one hand. On the other hand, it's really what the stock market did with the stock. So when the fair value went up, the stock price went up. When the fair value went down, the stock price went down. And you see it's here very good and here very good, but it's unreliable. Still it's unreliable. And if we see this here, I want to see the adjusted earnings per share. Now let's have a back and look at into the future, present till future. And then you see something similar to Itoshu, that based on the estimates of the running business year, the stock is overvalued. So we had this a period phase of decrease. So the trend is downward. And then how did we call it? The Buffett bump?
Yeah.
Now there's a Buffett bump. It's this one. But I think that the overall trend, the long-term trend of this company, maybe of all trading companies, we were just looking at two of these, is downward. So personally, I wouldn't invest right now because we are here. Right now we are here. I wouldn't buy the stocks, honestly. If I'm a dividend income investor, I still would wait. If you're a dividend income investor, many dividend investors look at just this. Oh my God, the stock is so undervalued. So this is really a gap here between the fair value based on dividends and the fair value based on earnings. This is really a gap. And if you are only a dividend investor, if you're just looking at dividends, then you might think that the stock is a bargain, because then you just look at this. You just look at this. Oh my God, dividend yield more than 5%. The stock is a bargain because dividend yield is much higher than it was in the past. And there's no dividend cut coming. So the stock is really, really cheap. But if you look at the earnings, then it says something completely else. And the stock market also, at least here in the medium term for the last years, also says that the stock is not a bargain because the stock price is decreasing. So personally, I am not going to buy the stock right now. If I'm interested in high yields, and I still would wait some time until the stock price comes back, until this Buffett bump is gone. But for sure, Chad, I also can't say how long this Buffett bump is lasting. No? Maybe the stock price still going up in the short term. Exactly, we don't know.
So let me make. I'm going to show the same screens, but what I've been putting together on my screen is all 5 of these companies, sort of in parallel with the same thing, so we can see without so much animation. So let's look at Mitsubishi, and you can see here is the Buffett bump in the stock price, but it's going to dip according to the estimates. it's going to dip and then come back, maybe not quite as high as the current valuation, but if you wait until at this point, if the stock price follows like it has been over the last couple of years, over the last decade actually, and that's what Torsten was saying, then this would be a good time to buy, and you'd probably see gains if you wait a little bit. For the second one, you can see the same bump. Now the estimates, they don't have numbers for Sumitomo because they haven't been released by the experts, but for operating cash flow and earnings per share, you can see that they expect the same kind of dip. So I'm expecting the stock price to go down after the Buffett bump, and then might be a good time to buy. I'm looking forward to seeing the estimates actually come out with estimations, or the experts. So let's look at the third one. So here's the same bump. Again, good time to buy if the stock price drops down a little bit because you'll see gains. The fourth one, this one had a massive drop. Marubeni had a huge drop between the middle of 2019 and now 2020. I don't think this was all just COVID. You can see the stock price dropped because of COVID, but their operating cash flow took a dive. That was interesting. Let's take those out of there. So, but you can see the same thing with the adjusted earnings per share. It's going to drop. Maybe in March would be a good time to buy, and then you'll see gains. And on the fifth one, same kind of thing. Here's the drop that they're expecting to see, and then slight gains, and it's overvalued. And here's the Buffett bump from the last couple weeks. But you can see the same basic thing. And like we were talking about earlier, there are parallels between all five of these companies because of their integration, horizontal, vertical. They're basically exchange traded funds for the entire Japanese economy. Now, one thing that I did want to get into before we ended the stream is how we could actually get into this. Buffett has the ability to buy whatever he wants anywhere in the world he wants to buy it because of the circles that he runs in, and he can move his money around however he wants to because he can pay the fees. Most of us don't have that luxury. But I did find one article that talked about how we can get involved in this. We can play the move using ETFs. This is an article from CNBC. And there's a number of exchange-traded funds within the United States that follow a lot of these stocks and follow a lot of stocks like them. The trading companies, these five are the top five. There's actually 7 in the company, or 7 based in Japan. So the iShares MSCI Japan ETF is one of them. The stock symbol is EWJ. I know you don't have ETFs on dividendstocks.cash, but for people in the United States, these are options. There's another one, DXJ, for the wisdom tree. And there's that link. And we will post, I'll post a link to this text, or I'll put it up on my website or something like that. Another one, BPJP, for beta builders. There's a number of different Japan ETFs that you can get into. In fact, if you go to etfdb.com and search for Japan Equities ETFs, they haven't had that great of a return year to date, but you can flip through and see what their components are, what they're holding. And in this one in particular, JPN, they've got like 400 companies that they track because they track the Nikkei 400. So this is a way for people within the United States and in Europe to get into these companies looking at the broad Japanese market. And ETFs are a good thing to get into if you want to not worry about it and let someone else deal with the details. But
and can I?
Of course.
If you want a little bit, we don't have only one last thing about the trading companies. At least for me, is be aware that Warren started investing in these companies around 12 months ago, if I remember well.
Right.
So he started investing in these companies before Corona. And second thing is, after Corona happened, he was still buying more shares. So he started investing somewhere here, just roughly here, when they were already down, and then they were undervalued. They looked undervalued, both from earnings and from dividends perspective, and probably also from cash flow. From cash flow, they were fairly valued, okay, but they were either fairly valued or undervalued. And then we had this Corona, and he still was buying these trading companies, investing in them, piling up the stock, although they face here more or less probably short-term problems. So it's obvious that he believes in these trading companies, and Corona did not change his point of view. So that's one thing I wanted to mention. Then the other thing, Chad, you mentioned ETF, and I mentioned Japanese stocks. So we have some more Japanese stocks here.
Awesome.
Yeah, not only trading companies. So right now we have 20 Japanese stocks, and the trading companies are not the biggest ones. So the biggest ones are Toyota, Softbank. Softbank, by the way, I was reading in a newspaper that the newest hypothesis for the capital gains of the tech stocks, for the tech stock rally, it's not longer the fault of the crowd from Robinhood. It's not longer the fault of Robinhood traders, which boosted the Nasdaq. Now it's SoftBank because they sold stock options.
Ah.
It's completely ridiculous in my point of view. So the press is always searching someone who's guilty for something many people can't explain. So it's the endless story of human history, that you always are looking for easy explanations of things we don't understand. And the last explanation is SoftBank is guilty for the strong Nasdaq. Okay, so Toyota, SoftBank, Kia, and so a lot of stocks which have higher market capitalization than the trading companies, and they all pay dividends twice a year, some more, some less. Okay, that's all I wanted to say about Japan.
But excuse me, just a sec.
Yep. Okay, as I said,
So one thing that I did want to point out is you have been doing a lot of work adding stocks to dividendstocks.cash over the last couple of weeks. I'm looking at the insert date, and there's a lot here from Asia. You must have gotten some good data sources over there, right?
I already have the data sources for the same data sources that did not change, but basically we are not going to add stocks en masse, so in bulk for 100 stocks or something like that, because
right.
Each stock we add is handcrafted, hand selected, and we also check all fundamentals before we add them. So we don't want any obvious data mistakes. By the way, if you look at let's go back to the trading companies just once more. If you look at the revenues, then you see for each trading company you see this drop in revenues here, and the margins increase. This is due to a change in the accounting standards. They adopted international accounting standards back in 2003. It's not a data error. They just didn't correct these numbers in the past. No one has them because we didn't want to calculate it by hand.
No.
too cumbersome, and it's too far in the past to be decisive. But anyway, we always look at the numbers if we have data errors and so on, and we just add one by one, and quality counts more than quantity.
Yep.
Yeah, and as you said, we have a lot of new stocks added, and a lot of stocks from Asia, mostly from China, including these special zones like Hong Kong or Shanghai, South Korea, Japan, of course, and Taiwan. Yeah. And what's interesting is that these are really big companies. There are some companies, look at this, 135 billion US dollar. It's a larger market capitalization. This stock outclasses any German stock from market capitalization, and still most German investors never heard of China Merchant Bank. What's that? And there are some stocks, China Life Insurance. I don't know if you can buy the stocks from. Some people told me from the German audience that they are not able to find these stocks on their brokers, although they have a very high market capitalization and they are really interesting from a fundamental point of view. And this is a little bit sad because most people, at least here in Germany, are looking for German stocks, of course, and they are still looking over the Atlantic to the US. But looking to the other side, to the east, most people don't. And I hope that it will change, because I think that are really nice investment opportunities. We have seen, for example, on the one hand, I said that these trading companies, I wouldn't invest in them right now because we have a downward trend. But on the other hand, the multiples, for example, for Itochu are really low. Multiples, price earnings, about 6 or something. It's really low. And combined with high dividends. I think it's interesting, and we will add some more stocks in the near future from Asia. Mm-hmm.
Okay, well, we've been on for an hour. This has been a wide-ranging conversation on a bunch of wide-ranging stocks.
Exactly. Okay, then we can say goodbye to the audience. Thanks for watching, and come back next week when we will talk about anything else. We haven't decided yet about what.
Again, if you have ideas on what we could talk about from a Dividend International perspective, please post that in the comments. Please contact either one of us. We have a meeting on Saturday mornings, well, my time, to discuss what we want to come up with. And everything that you've seen today has been about 24 hours of research for me. I think Torsten's been looking at it for a couple of days longer than that. But if you want to give us ideas on what we could talk about early in the week, we could spend a lot more time so we could dive even deeper. So please post your ideas in the comments of this video on any of our pages, and we will see it. And we will see you next week with a whole different topic.
Okay. Thanks for watching. Bye-bye.